Oh, well, tell me about these bomb pots.
It's like every time the button goes around one full time, then it's basically two flops at the same time. And then everybody antes up, and it's basically like you get to play each flop as if it's its own hand. So there's a potential of like winning both hands or just one hand. And it's just it's a fun kind of like change up in the, but I was $100 buy-in, and I walked away with 331, and I gave $31 to the dealer. And yeah.
Not bad.
You say Doyle, you mentioned Doyle Brunson, and I remember in college, everyone was reading his book. Like this giant
I read it.
book. He's like sitting in a chair or something. I don't know, like that.
You missed that Austin supported himself on poker for 6 months.
Yeah. Every night I would play till like 8 a.m. every single night for 6 months.
That's the least surprising news I found out on this podcast. That does not surprise me at all.
This is Top Line.
This episode of Top Line is brought to you by Contract Book. Raise your hand if you love managing contracts. We didn't think so. Contract Book offers a holistic contract management platform equipped to handle agreements of all shapes and sizes. Through automation and centralized management, they unlock the value of your data while creating lovable contracting moments for teams and organizations. Visit contractbook.com to take control of your contracts for good. We should officially start the episode 8, I believe, of Top Line. I'm Sam Jacobs, your co-host, CEO of Pavilion. I've got AJ Bruno, CEO of QuotaPath, Asid Zaman, CEO of Sales Talent Agency. Gents, welcome to another week in the trenches.
Yeah, I like this word, in the trenches. It feels like that. I'm even wearing like army colors today, which was like.
I feel like the people that have actually fought in wars always might take umbrage at the metaphors, but people have been using them for a long time, so it's not just us. AJ, how are you?
I'm in the bowels of the trenches. It feels like.
Really? How come?
I have a board call tomorrow that I feel alignment. I talked about our offsite in the previous episode, and just kind of articulating it. And I feel really clear about it. But there's this challenge within the organization, and we talk about motivation and how to keep teams motivated, of just urgency and just making sure that everyone's doing the things they need to do to make the company successful. And there's this balance between doing what's possible, and CEOs always want things done fucking faster, always. And what you're hearing from your team, like what's possible and what's not. And when you hear something as a CEO that you don't like, you have a visceral reaction to it as a trigger of like, oh, it can't be done, can't do this. And it's that thing. And then you go kind of pressure test it against what can be done. I actually did that, use Pavilion for that very thing. Hey, how long should this thing take? And
everybody said a while, right?
Yeah. Actually, no, the opposite. They're all like, oh yeah, 4 weeks. David, John.
Yeah.
Equilar is like, oh yeah, 4. I was like, David, sure. So anyway, so I'm going and testing that right now, but I'm just I'm on a mission. We're going to kill all the inefficiencies in the business. The CEOs can do that. They can snap their fingers. They're all gone. We have that power, guys. We can do it.
Oh, I hear you. I mean, well, fair enough. Okay. Good luck with your board call. Austin, what's up with you?
I feel good. I slept well yesterday, and I usually sleep really, really badly. And I have no idea why I slept well. I was working till 11.
Because of Athletic Greens.
Maybe Athletic Greens. Come on, guys, sponsor me.
That was his shout out last week. Don't give him that. Don't give him that, Sam.
He said everything changed. He skipped one scoop of green bullshit.
Yeah. Imagine it's just mental. Even then it would be amazing. But yeah, I slept well, so I feel happy.
All right, good.
Yeah.
How are things at Sales Talent Agency?
Things are good. We're in the trenches, in the bowels of the trenches, as AJ says. We're very much there. Yeah. It's just fascinating. The market is interesting. And I think I'm coming to a point of view where I'm preparing for the rest of this year to be exactly how this feels right now.
Yep.
And
100%.
I feel a lot of conviction around that. So it at least gives you a 6-month period where you feel that this is how it's going to be. Now let me plan the fight against this versus like, maybe it'll get a little bit better. Now I'm like, it'll be like this. So let's figure this out. So I feel good.
AJ, you were going to say something.
No, I like this board call tomorrow there's a 6-month plan. There's an 18-month plan. 6 month is really, it's known. Like these are the things. Let's go do those things. 18-month, I think is where the innovation and opportunity of like looking at the long term of what, what's the world going to look like. And we always say this, Austin's like, we're going to talk about generative AI today. And then we like say one sentence, but, but like we can really like, I feel conviction. We're halfway there. We're into the home stretch, gents.
We are not in the home stretch of like a difficult economy. No way.
Really? How long? So it depends on how long you think the home stretch is. I do feel like some point next year will be better. Maybe I'm just being crazy.
No, I feel, well, that's not a home stretch. We got 12 months of malaise, of economic malaise, in my opinion. I think things will start to get better in the fall of 2024.
Ooh, so they'll be in an election year with a shitty economy? Biden.
Well, it's not necessarily like a globally shitty economy. It's a shitty economy within our corner of the world. It all depends who you sell to, I think.
Yeah.
But
better than an election year with the pandemic. Let's look at things a little bit on the bright side.
I think I think so first of all, I just recorded a cool podcast with Chris Walker from Refine Labs here in Austin. And just first things first is like we all got to understand. There's a few CEOs that are doing great and a few companies that are doing great. Most companies are not doing that well. And I wrote to, I'm still doing my weekly investor updates and my weekly company updates. And I had this, I think, the reason I talk about like mood stabilizers and stuff, because like I just hope these epiphanies last longer than like 24 hours. But at any rate, because I was like going through, we recorded last week, I was doing good. And then, like Friday afternoon, we wrote off like 20, non-paying members or something. And like I logged into ChargeBee and within 30 minutes, like ARR went down, significantly. And then I actually went back up over the weekend. But here's the point. First of all, GLG, where I used to work through the financial crisis, I think I mentioned this, went from 280 to 230 in 12 months when I was there. 280 million in ARR to 230 million. And this, again, the reason that I freak out so much is because, I read Lemkin said one time, SaaS businesses should never get smaller. And so like I had this idea, but GLG is a recurring revenue business, very much so. And to lose $50 million of ARR. And then I was talking to Chris Walker, and they're not, he says it on his podcast, it'll come out on Saturday. So I'm not like revealing anything, that they're down probably 10 to 20% this year.
Yeah.
And then I just had this moment where I'm like, dude, you gotta fucking stop. Like, this is me telling myself, like, you got to stop. Like, if you want to sell the business tomorrow, or find some way to get out of this, fine. But that's a stupid idea. What you really need to do is like let go. It doesn't matter what the company's worth. It doesn't matter. You got to imagine that you're on a 10-year journey. I started working on Pavilion full time in 2018 in December. It hasn't even been 5 years. We're at 10,000 members. We're 8 figures in revenue. We are partnering with Winning by Design and Insight Partners and STA and QuotaPath and all of the best companies in our space. And if we had a year where, God forbid, revenue went down, is it the end of the world? No, it is not the end of the world. I'm trying to build, like, it's the infinite game. It's like, if I'm trying to sell, if I'm like constantly thinking about like, when do I get out? It is the value is effectively zero.
I think that's such a good point, right? Like, valuations matter when you're selling or when you're raising money. If you're not doing those things, fuck it, right?
It doesn't fucking matter. Just like,
it doesn't matter.
Find a way to live within your means so that I don't need to sell the company to like pay my bills.
Yeah.
I'm going to have both of you show up at my board call tomorrow. I can't wait. I'm inviting you.
No, but I'm serious about this. And
I
feel like really good today. The past couple of days, I felt like who cares? I need to break even. Like, I need to make sure we don't run out of money. And I have a debt facility with SVB, and we are currently, and we do a 13-week cash flow forecast every single week, and we are profitable through, September. Like, everything's okay. It's going to be okay. It's okay if we have a down year. It's okay if we have 2 down years. The main thing that's not okay is to just sit still and watch the train go off the cliff. Like, you do need to respond to the market and respond with pricing and packaging and new initiatives. But like, otherwise, yeah, you're probably not going to like exit in the next year or two. Fine. Okay.
Yeah. And it's not existential. Like, like, let's say there's a 10, 20% decline. Is that existential? If for some business that is existential, right? Like that, they don't look at it differently. But for most businesses, a decline in revenue in a really bad economic environment is not necessarily existential if it's 10, 20%. And so it's like, as long as you're not taking on existential risk, you shouldn't be so worried. You said something a couple of episodes ago, and it keeps like floating around in my brain, which is like, so much of our self-worth is tied to like this performance of the business. And we just look at that performance irrespective of the state of the market. So we like look at this one type of performance that has to happen at all times. And I think it's so helpful to just redefine what good looks like in the market that you're in, and then tie your self-worth to that. It's asking a lot to like not have any self-worth tied to like performance of a business, but base it on the market that you're in. And in this market, if we decline by 10, 20%, I'm not crying. Like, I'm totally fine with that.
No, you fucking killed it if you only declined. There have been, you probably know, how many layoffs have there been so far in tech?
175,000.
That's just this year, right?
Yeah.
And last year there was what?
Like 150.
So we're 300,000 layoffs.
Yeah.
Go ahead, AJ.
Well, continue to innovate. You guys are saying it very clearly. I went back. I know we've talked Founders podcast, David Cerna previously, but I went back and I was on a drive with my dad, and I re-listened to the Estee Lauder episode, which was so good.
Yeah. Oh my.
What?
That was a great one. That was my favorite.
It was fantastic. Yeah. But the thing that she says over and over again, long-term. These are long-term. Like, does not happen overnight. Dyson took 14 years. 14 years for that guy to do anything.
We're not day traders.
I know we're not day trade, and it's such a good point. My wife, partner person, friend person, the person I sometimes live with when I'm not traveling. She's like, this startup stuff never made any sense to me anyway. She's like, when I grew up, it took 30 years to build a great company. Yeah. It took 40 years to build a great company. So one down year in a terrible economy. Anyway, even right now, it's making me feel better, to be completely honest. Like, if your board can fire you, AJ, that's different. Because if they're all, and I know some of them listen, and but whatever.
I know we talked about, whatever. You're right. I know we talked about our parents, mothers being on a podcast at one time. I think our spouses, our partners need to do this. I love Sam's wife, partner, whatever.
She's my wife.
I know this. You called her. You said wife, partner, whatever. I'm just
because everybody's like using the word partner these days. So I'm like, I don't know. I'm confused if there's a problem with my wife.
Your wife, I just love, because my wife is the very, very similar in nature of just like, she's like kind of shrug of shoulders, but she's really good at giving hugs when I need them, and that's the thing that I appreciate and take with me.
We had a few things on the docket today. Asad, what are you seeing out there? You've got AI valuation data from the PitchBook analyst. You've got, what do you want to talk about? You've always got good stuff.
There. Like I think we start there, and then we can go to the Jason Lemkin poll. I thought that was super fascinating.
Cool, go for it.
So in terms of AI, when we talk to investors or people in the field, it feels like the tale of two cities, right? Like the best of worlds and the worst of worlds. AI, everything's going really well. People are excited. Companies are raising money easily. Valuations are great. And the rest of the market's eating shit. And so I wanted to find out exactly what is happening. Can we quantify this for our listeners and for ourselves as well? So we reached out to the PitchBook analyst, and the person who's doing this over there, he's been doing it for 5 years. So he has a really good perspective perspective on the market. And the way that he explained it to me was that he's like, firstly, you have to figure out who you're talking about, because every company is doing something with AI, but it's not the same thing. Like a Series C stage ATS company that integrates AI into their workflow is not the same thing as somebody who is building an LLM or is building a new form of an ATS on top of an LLM that is AI native. So he's like, think of it as like two buckets: AI integrated, everyone that's trying to integrate it, then AI native. And within that, you have that infrastructure / LLM layer. And then the people that are building applications on top of this that are rethinking how workflow should happen, with AI being the core over there. And so in the AI integrated bucket, these people are not really benefiting a lot from integrating AI from a valuations and fundraising perspective. They're still struggling. So if it's a Series C company that's like, look, we integrated this, it doesn't change the game for them. You don't get much better of a valuation, and it doesn't change your ability to raise money if your unit economics are not good. But the real game in town is those AI native companies. And over there, it's really interesting. So Series A multiples for companies that are building LLMs or the infrastructure layer are sitting at 50 to 100 times revenue right now, today. And the way he spoke about that, he's like, it's actually not based on revenue. It's based on like, how much money do you need to get to the next stage? Let's figure this out. It could be 100 times the little bit of revenue you have. It's okay. The ones that are building applications on top of AI right now that are AI native companies, those are at 40 to 50 x of revenue. So still really healthy multiples, but not the same as somebody who's building a really good LLM. And when you think about later stage rounds, because now you're seeing companies like Anthropic raise a Series C, OpenAI is in the Series C stage, etc. There has been some multiple compression over there because these companies are now at a stage where you have to look at the business fundamentals to some extent. But even there, it's like 30 to 40 times revenue, which is way better than what you look at any other Series C or D stage company. When you think about normal SaaS companies, a Series A round at 10 to 20 times revenue is like the best you'll see in the market right now. We spoke about a few weeks ago that Series Cs are just not happening. Growth stage is done. It's at a standstill right now. So it's interesting to see the difference between these two spaces. The next question becomes, how sustainable is this, right? Like, is this a bubble? Will it pop, or does it right size next to the other markets? And so their perspective there that was interesting is that when you look at the results from Microsoft, Gartner, and Forrester's surveys of CIOs asking them about technology spend, even in this downturn, net spend is increasing. It's just not being equally distributed across the sector. It's going to some companies doing certain things, and they believe CIOs will prioritize spend for AI companies. So in the very near term, there'll be enough momentum there for this to be sustainable. The concern is in 3 to 4 years, because a lot of these companies, the majority of them are Series A stage, early stage companies. They have to raise a growth round. Growth investors have put a pause on things. Non-traditional investors are not in the market. So where is that Series C, D, E round going to come from at those crazy valuations? And the quantities that they'll have to come from is one big question. And the other is, how many companies out there are willing to acquire an organization for $1 billion that has 10 million in revenue? You know, if you look at the S&P 500, will all 500 companies be able to make $1 billion acquisition? You could probably not say yes to that, right? It's probably less than those 500 companies. And so there's going to be a big challenge in a couple of years within AI, or potentially a big challenge when it comes to either raising growth rounds or finding some form of an exit, because of how frothy the multiples are right now. So that's the download.
What? Okay, I got a dumb question here. What does it take to build an LLM?
No comment.
No comment.
A lot of shit.
Like, no, you're saying
is that just interchangeable with machine learning? Is that like, I mean, you have a lot of data, right? It's probably fairly complicated. You're doing a training of a model, right? I don't like, I mean, I should just go at ChatGPT.
The two problems that there seem to be with building an LLM, and again, I'm not an expert at that, but it seems like talent and then the actual technology that you have to leverage. When you listen in on NVIDIA's earnings reports, like there is such a shortage of those GPUs that are needed in the market. So I think that's a big blocker, right? Like people are begging them to give them their GPUs. There is a shortage over there. So I think that's one cost, as well as like consideration. And the other is talent, right? Like just a couple of, before OpenAI, 80% of AI talent worked at Google, right? And there was like, there are not so many of these people out there that are amazing at what they do. So there's a huge constraint over there. And whenever there's high demand and low supply, you have $1 million compensation packages for those type of people. So I think when you think about the concerns or like the blockers, those are the two blockers for building an LLM.
I think, I mean, it's just sort of to your point about kicking the can down the road. The whole point of AI is that you're not going to need all of these people. You're not going to need the same number of people. If it's 30% improvement in productivity, which is what people are saying, then you're going to need 1/3 less people to get the same result, which I think these companies just hopefully keep. I mean, it's nice if you can get like a massive valuation, but I would even more so than, the SaaS frothiness of 2021 and 2022, you just got to keep your valuation under control because like we've talked about, the benefit of generative AI and of making, GitHub Copilot is that you can do so much with so few people that you won't need to charge. Like there will be massive price deflation in most technology solutions. You will be able to do the same thing and you won't need to charge $150 per user per month to justify, your margins. And so that means that then because these companies will be ubiquitous, it's like, well, so what is going to justify the $1 billion valuation? Because you're going to have tons and tons of customers that pay you very, very little. That's cool. That might be an awesome business that does 50 or 100 million in revenue. But again, multiples in the public markets are not 10 times, they're 5 to 6 times. So I think again, I come back to that thing that, I hate to always just be like basic, like mystery science theater for all in, but Chamath was talking about the story of how the guy that invented refrigeration, this was a story told to him by somebody else. Yeah. The guy that invented refrigeration made some money, but the person that really made all the money was Coca-Cola, meaning the company. And so I think AI will be a feature of every piece of software that we use, and it'll still be about some different workflow solution that delivers something meaningful. That'll be the true winners. And even then, again, when I my brain sort of works in like fuzzy imagery. That's how I think. And like my brain is like going to just thousands, maybe million. It's like just influencers times 10. It's like all new revenue streams for people to live middle-class lifestyles using AI to be more productive. That might mean creating software. That might mean executing different kinds of workflows in addition to, monetizing their lifestyle in some interesting way. But what do I know?
Well, it's interesting. I mean, it's interesting how you visualize it. I have a similar visual memory, and I actually made this comment on a link that I shared. It was a Reddit post that was basically all the memes, and it was like filling in the background, which is cool. It takes the meme and then zooms out, and it's like AI filled out the background of it. And when you look at it, you're like, oh, that makes sense. But then you actually like look at the backgrounds, and you're like, what the fuck is going on there? Like there's the one where it's the meme. Oh God, I forget the name of it, but it's a little girl. She's sitting in a car seat and she's like giving like a weird look. You guys know what I'm talking about? Like a weird look. And I guess AI thought she was in an airplane. And there's like two like melted faces and a wingless airplane in the background. So it's actually really funny, like how your brain just like, if you just looked at it, you're like, okay, that makes sense. So that makes sense. Your brain just like kind of takes that. And that's what AI is like doing right now. It's just like creating this context around
the other thing that I think is like super interesting about these founders that are raising at these valuations is that you've got to, like, at the speed at which AI is moving, right? Like we saw AutoGPT a little while ago, right? And before AutoGPT, you thought XYZ is going to be amazing if a company is built doing that. And then after AutoGPT, you're like, oh shit, like none of these things are needed. AutoGPT does it all. It just moves so quickly. So are you going to be able to take all the right turns over the next 4 or 5 years as this thing evolves? And I think it's been a little bit overconfident saying for 5 years, I can make all the right calls, all the right adjustments. Something's going to happen. I'm going to have to rethink how my product works. I'll get that right, etc. And I think by raising at such a high valuation, you take away a lot of optionality from yourself, because in the next couple of years, if you have to get an exit, if your valuation was too high, like you're not going to be able to get that exit. You won't be able to raise the money. So there is a little bit of sense in saying that like you're going to be offered these valuations, but just because somebody's offering you something doesn't mean it's the right thing to take. And it just feels, the part of it that was annoying to me was that a lot of what we are all dealing with right now is because of the valuation problem that happened. And at least one would hope that you learn some fucking lessons from it, like on all sides, founders, investors, everyone. And it's like, literally, it took a fucking minute. We're still dealing with that shit from the last round. And immediately, like, we're doing the same thing again. And it's really annoying.
Yeah.
We had it with crypto. Crypto was the same way. We had,
I was with the CEO team over the weekend. Just a funny story. And they, I'm going to try and make sure that they are not identifiable in any way, but they raised 80 to 100 at the height of the boom, but half of it was secondary. And their company is around 25 million in ARR, and the post-money valuation was $500 million. And it's just funny because that the company is screwed. The company has no outs. The company is worth, and they're doing as well as we're all doing, right? They're doing okay, not great.
So they're worth 200 million at best.
At best. No, they're worth 100 million, 125. Yeah. But they were not sweating it. They did not give a shit because they had 40 million in the bank and, they were fine. Like
that's too much secondary. Like that's like bad investor, like silly. That's a mistake on the investor side, because like I think there's so much sense in giving some secondary, like get the person comfortable so you can think with the right mind frame, right? Like that's brilliant. But if you're giving $10-20 million secondaries like to a handful of people, like you take away so much of that pressure that is needed when building the business. I think it's super silly. Again, investors didn't learn the lesson. Now we're doing this again over here with AI.
Yeah. I mean, I think it depends if you view it as a transaction. It depends if the company's profitable or not. If the company's profitable, then it's a transaction. It's just a transaction, but if the company's burning capital, then, and you're right that it distorts incentives in weird ways. Austin, you had a shifting topics. Jason Lemkin, our friend, we got to get him on here one time. He'll just talk the whole time.
I like
dropping. He'll barely take a breath. That's how he's been every time we've like brought him onto something, but always useful information. He said, "What was it? Recite the poll, and then because I have an opinion on this."
So I was on Twitter late last night, and I saw him screenshot the poll he put on Twitter, and essentially it was a question: should a VP of sales have a side hustle? And it had 3 options. Yes, no, it's okay, but it's not ideal. And so 37% of people said it's totally fine. 29% of people said it's not ideal, but it's okay. And 34% of people said no. And so maybe I'll provide like my perspective on it. We can all go through it because I think it's an interesting topic. I found this interesting, and I was thinking about what forms of side hustles should a VP of sales have. And so the one that comes to mind first is this idea of fractional work. Right now in this market, there's a rise in fractional work because on the company side, where the demand comes from, companies are trying to be more fiscally responsible, especially earlier stage companies. So they might want to work with a fractional leader versus make a full-time hire. There have been tons of layoffs. The job market is a bit softer, so people are willing to do more of that work. So I think that's one form. And I think the demand stays consistent, maybe drops a little bit, but it's still high, even once the market stabilizes. The other is like the startup idea on the side, a real estate portfolio, etc. And if I look at the world as a VP of sales, I can see why having some form of a hedge with side hustles is a good thing. Gives you more security in an unstable role. The average tenure of a VP of sales has been under 2 years for the last 10 years, right? In a good market. So going into this type of environment that we're going into, I can see why they want this. But if I'm a CEO and a founder and I'm looking to hire a VP of sales and I find out that they have a side hustle, I'm very concerned and I'm killing that interview process. I will not even take them into the next stages of that process. I don't care how good they could potentially be. I don't want them in my company. And I think the reason for that is this. Building a technology company in any market is hard. 1% of seed round companies make it to Series E. That's stat. And it's hard even in the good times, but it's really hard right now. And we know that the market we're going to go into once this shit clears out is still a non-0% interest rate environment where demand is harder to generate, deals are hard to get prioritized, people are hard to keep motivated. I want my VP of sales so all in, obsessed with figuring this shit out, figuring out the experiments to run to create repeatability in my go-to-market motion, scaling the revenue stream, scaling the team, all of that. I want them all in so that if we fail, and most companies trying this fail, at least I can go to bed at night as the founder saying we gave it our best shot. And if my VP of sales, even if they worked 40 hours a week but had something else on the side, I can't feel that way. So I think it's important for VPs of sales to kind of think this through and realize, if you've chosen to be a VP of sales in technology, you've chosen to join a high-risk asset class or sector where the potential for a really meaningful outcome is there. But for you to be able to activate that outcome, you have to be obsessed and all in. You can't be hedging. Otherwise, just go and do it in oil and gas or somewhere else. If you're doing it here, you have to be all in. So that is my perspective.
I want Sam to go next because I feel an argument coming. I'm excited for this.
Well, it's not an argument. I mean, reasonable people can disagree.
Yeah.
I strongly disagree. But that's because I've been a VP of sales, but I'm a CEO now. I think the first couple arguments, there's a couple of arguments you made that I just think you glossed over a little bit, which are just true. And then I also think so first of all, it's true. We can't fire at will whenever we want, whenever we have a bad quarter. And because it's not just VPs of sales, I think everybody should have a side hustle. This is a side hustle. Now you can say, no, it's not a side hustle. We're promoting ST. No, we're not. I mean, we are, but we are promoting our personal brands as well. When you post on LinkedIn, that is a side hustle. Should we begrudge that from our teams? I don't think so. I think the world we just talked about how we don't know what the fuck is going on with AI. I think AI is the same thing as COVID. It is a secular disruption, a fundamental secular disruption to the economy. And we're experiencing it all at the same time. So if you're out there and you're trying to make your way in the world, I think the reality is that you're going to have to find ways to fend for yourself, because yes, it's true that we need them to be all in, but if the wind changes and the tides turn, they will get fired in a second. And so I do think that it's acceptable and necessary for people to build a portfolio career. I think there's way more opportunities than just being a fractional. Like fractional to me implies like meaningful hours per week, but there's where, certain people serve on advisory boards. Certain people, I'm sure, AJ's an investor, I'm sure, in certain companies, in addition to taking, I think it's the well-rounded person has multiple passions, multiple ways of both, but also just the main point, the secondary point, multiple mechanisms through which both to distribute, but also ingest expertise and new information. And I think that people, so what are other side hustles? So Kiva Kolstein is the president and CRO of AlphaSense. And he joined that company when they were single digit ARR, I think 5 or 6 million, and they're well past 200 now. And they are crushing it. And he's been the dean of CRO school for Pavilion he's been teaching how to build a world-class team for a couple of years now. Does that diminish? It certainly doesn't seem to have impacted AlphaSense's performance. It impacts his ability to recruit great talent because he's now exposed to a wider group of people and people want to go work for him because he's viewed as an influencer and as an authority. I think it increases and elevates the AlphaSense brand. And I think that, and I think he probably learned something from advising companies, investing in companies, and speaking to people that are up and coming on their own trajectory. So all of that is to say that there's like companies, I just think fundamentally to the point of AI, and I'll get off my soapbox after this, but I think that I think the concept of like the firm, the company, a group of people that are, the reason companies exist is because of transfer costs, right? It's because we need to organize in this mechanism because the cost of sharing information is too high when we're all not aligned in this way. And there's this whole like theory of the firm in terms of like why firms exist in the first place. And I think transfer costs are going down, job security is going down. And I think we as employers should understand and have an expectation that I think the world will look much more like the professional sports leagues. I think people are going to come in and out of different roles. I think maybe 2 years is a feature, not a bug. If people can be protected, if they learn how to negotiate, that aligns the work that they do in that time period with the value they generate. And if they have a community like Pavilion or some kind of support system that provides continuity for their career while they go in and out at certain points at different stages and where they leverage their expertise. So, but then the last thing I'll say is, but you're also right that it can't be conflicting or competing with the company itself. I can't have a VP of sales that's advising on HR tech if I run an HR tech company. That is a clear conflict. I can see that if they're advising on how to be a great sales leader, because I think that that's non-competitive expertise. So I think it's a little tricky, but fundamentally, I believe people need side hustles more than should have. They must. That is a skill of a modern executive, is to be in the in a way that extends beyond your company.
I think I think Austin's probably going to agree with this. I think there's the general spectrum of what side hustle is. The thing that I heard from you, Sam, is that outside learning and curiosity, that's the personal brand. I mean, that's why I'm here. You guys are both great communicators, and I want to learn from you and be a better communicator. That's going to help me in my own business. Is this a side hustle? I don't know. I think there's some level of that, but there's the other spectrum. My dad growing up had a video production company. He was a pilot full-time for US Airways. Why? Because US Airways had 5 crashes in a row, and he was afraid that he's going to lose his job, and was like, guess I'll start a business, start a production company. And he did local commercials. I got into acting through that, did stage acting, and went all the way through, did professional theater. And because of that side hustle, there you go. So you're like, AJ, great, you're on side hustles. No, I'm on the exact same side of the fence that Austin is, which is if I had a sales leader coming in, and by the way, that poll was out to the world. It wasn't VP of sales saying, should a VP of sales have a side hustle? It was anyone on Twitter, any bot could come in and say yes to that. And so I look at that as a little bit different. You're my executive. We live in a world where I'm not going to put time tracking on my team as much as my VP of finance really wants that. I have to look for ways to motivate and push people. And if there's a outside learning and development, that's a great opportunity. A passion, a hobby, fly airplanes, great. Well, we give half day Fridays, and we do a lot of things to make sure that people have a great work-life balance. But at what cost? Is a side hustle I can do all the things that quota path for the 15 hours and then do a side hustle and a side gig? Probably not what you're intending or what you're talking to, because an advisor, you're right. I invest in dozens of companies. I've advised companies. And a lot of those are for me to learn business models. I just really love learning. I really like understanding what makes things tick so I can improve my own business. If someone came to me and I had side hustle and this was the clear framework and they were upfront about it, great. If they're working 2 jobs effectively, we've had an engineer working 2 jobs. Well, how do I figure that out? So it's where do you draw the line on these things?
I think
Go ahead.
That's a good point. I think if you can draw a line saying that this is complementary in some way, form, or the other to this thing that we're doing, because Sam, you make a good point with the dean of go-to-market school. I teach a course there. I teach another course at Pavilion. We do this thing.
Side hustlers. You guys are 2 side hustlers. Look at these 2 side hustlers over here.
Saying that side hustle suck. But those things are complementary to my core thing, right? When I spend time on LinkedIn, it benefits me in some way, form, or the other. When I teach this course, it made me think through my frameworks, finesse them a little bit, teach them, get exposure. All those things are complementary to the core thing. And so maybe that's the distinction, is if what you're doing as a side hustle is complementary to our company and your job, way more open to that conversation, but I still want it to be a minimal spend of your time. If it is like completely to the left of what we're doing, like I can't draw the line of how this benefits us and me and you in this role, that's where I get like super concerned. Like if the person says, I have a really active real estate portfolio that takes 15 hours a week because like somebody calls me and like something the shower breaks and I have to make arrangements, etc. I'm not down for that. Like then go figure this out somewhere else. Like you're not working in my company as a VP of sales. That's maybe the distinction.
I think those are reasonable arguments. I mean, and AJ, as I haven't shared on this podcast, but I think I've shared that we've also had, it was great. Brief, quick anecdote was that we found out a salesperson that worked for us. This was last year. This is, the era of COVID had, she had a different LinkedIn profile. She had 2 LinkedIn profiles. What? And we had a different head of HR at the time. And this head of HR came to me and she said, we found out that this woman has 2 LinkedIn profiles. I said, that's really weird and not okay. She must have 2 jobs. And she said, no, lots of people have 2 Instagram profiles. It's like, nobody has 2 LinkedIn profiles. That's absolutely not a thing. So then, and she said, and besides, having 2 jobs isn't a fireable offense. So then we find out a few days later, no, she has 2 jobs. She has literally 2 jobs. And so I said, okay, she's got to go. So I don't believe that having 2 jobs is a side hustle. I believe that's just disingenuous and unethical. And
why did the HR person feel like it's not a fireable offense?
Well, I'm getting there. That's the funny part. So I say we got to fire. So then the HR person slacks me. Okay, today we parted ways with this person, and today was the last day we shut off all our systems, and and we fired her for lack of attendance in meetings and poor performance and insubordination or something like that. And I said, no. We fired her because she has 2 jobs. And she said, no, that's not a fireable offense. So I said, well, I'm the CEO. And it is a fireable offense.
It is, yeah.
so 2 days later, the HR person resigns. And my head of people says, she really, I couldn't get it. I couldn't figure it out. She just was really adamant that it's not a fireable offense. I said, that's because she has 2 jobs.
Did you find her other LinkedIn?
I didn't have the time.
5 of them.
Oh my God. That's amazing.
It's amazing.
Oh, that's the best story.
Yeah, that's not what I, it was just so great when my head of people, Anne, was like, I don't quite understand. I'm like, oh, I understand it perfectly.
Connection is right. A straight line. It's not complicated. Wow. AJ, how did you find out your engineer was moonlighting in another place?
Really well. So my CTO, co-founder CTO, went on parental leave when he was being hired. So he also kind of came in, and we he only had 1 LinkedIn, but it was like he had previously a contractor type of role, but he no-showed just random meetings and was stand-ups and late to stand-ups. So it was pretty easy. We figured it out within 3 months. And when Eric came back, we couldn't do anything, but Eric had a sense, I had a spidey sense on this as well. And we ended up doing a little bit of sleuthing on the LLC that he had on his LinkedIn and kind of figuring it out, and literally just called and said, hey, is this person employed there? Yes, he is. Okay.
Did you ask how is he doing? Does he make it to all the meetings?
he misses half of it. He's got a very particular work-life balance. He cannot attend any morning meetings. And then
the thing I will get frustrated at, I totally understand unemployment is a safety net, and it's fine, whatever, in that situation. I really dislike that a year later, I got an unemployment notice for this person from their state. They had obviously gone to a different job, or no, they had that job. They got fired probably from that job and then had an unemployment. And it's just it's a very frustrating thing of I'm going to get hit on the premiums. Now, my wife has had the same situation happen, not the 2 jobs thing, but someone went to a different job and they got fired, and then they go back to her work and put unemployment. Sucks. It's miserable.
Just brief aside that because the mailing address is my home most of the time, And I get all of these notice. This is the perils of like fully remote work. Is like,
Here we are.
the state of South Carolina. I'm like, I'm not responding to anything you ever send me in your
Fucking
stupid
Maine.
letter with your
Maine's the
stupid
worst.
system.
Graham and Maine, I get all of the Maine things all the time. Like
That's so
Pennsylvania,
annoying.
because Pennsylvania is just bullshit anyway. But like Maine, oh,
We're about out of time.
Shout-outs.
I think it's time for shout outs and wins of the week. So, Asad, let's start with you. Give us a shout out that is not a direct to consumer brand selling junk science.
Okay, then now I'm gonna have to think about this. I was thinking about because AJ has been listening to Founders and I've been listening to it for some time. And I over the last week, I listened to a number of episodes that Acquired did. And Acquired, like for those who don't know, it's a podcast that does these like 3-hour breakdowns on a company's history, story, etc. Like if anyone's interested, the one on LVMH is just fascinating. There's a lot of overlap between like Founders and Acquired. Like I think together you learn about the founder and the company, and it's super powerful. And I was just thinking, like, when you work like, I don't know, 10, 11, 12 hours a day during a certain period, you don't have time to read, or it's not the most exciting thing to do, that you don't stop working and then at 11 at night you're reading a book. But it's just, so I really appreciate this new form of content, which is these long form podcasts, and how much time and effort these guys put into doing the research and putting it out there, because I enjoy listening to these way more than I enjoyed reading biographies and company history books. And they've made me a better leader and a better professional. So I'm just super appreciative of the work that these guys do.
That's awesome. AJ, how about you?
I've got a couple. So Athletic Greens, I tried this thing.
What else? New out of the box mattress, headset, some meditation app, some insurance thing.
I've got two. I'm going to shout out and kind of piggyback off of Asad, which is I'm going to shout out one of my investors, John Reale, got me into Founders as well. And over the weekend, he went on a journey on the Amazon Bezos, and he basically got an MBA on it and was like, hey, listen to these 4 episodes in this order. And I'm 2 down and then 2 to go. And oh my goodness, what a world that Amazon went through, and just a totally different world. The memos and anti-PowerPoints, really interesting, fascinating stuff. Second one is going to go to, it's a combined one, to my daughter and wife. I am going on Friday to on a field trip with my daughter to Philadelphia to see like Liberty Bell and Constitution and all the cool stuff, which I haven't done in years. Really excited, but I signed up for this like a couple months ago. Anyway, my wife last week looked at my calendar. She's like, AJ, you have a meeting on Friday, but you're signed up for the field trip. I looked, and it's like this pretty big one on product council. It's like a pretty important one. And I was like, she's like, you are going on this field trip, and I'm the standby, but you're going on this field trip. And so I moved things around, and afterwards my daughter came up to me and was really excited that I'm going with her.
Aww.
I haven't gone on a field trip yet. I actually have never gone on a field trip with my daughters. Not because I'm a poor dad, but because, COVID and field trips didn't exist. But so I'm really excited to go on this. This will be a win of the week. It's a future casting win of the week for me.
I love that. That was really
Constitution.
Yeah. Sounds like
Is there a Founders episode on like our founding fathers?
Should be. There's gotta be. That's awesome. That's awesome.
Sam, what's yours?
I've got a couple people to shout out. First, so we had this poker night last night here in Austin, and I walk in, and so that was just we were talking about at the beginning of the show. That was just so fun. And there's this guy there, Alex Richardson, and Alex is what's it called? I think Art of Mentoring might be the name of the company that he runs. He's a CEO. He might join our CEO community. And he said, I signed up for Pavilion today. And I said, oh, okay. How's it going? And he said, I work with a lot of trade associations and a lot of different membership organizations. And I got to tell you, your onboarding is amazing. And he said that he got a call from Brian Lee, our head of member experience, right away. He was welcomed by a ton of people, including BJ Matthew from the Austin chapter. And it was just awesome that his like pavilion experience right out of the gate. You know, I talk about churn on the show a lot, and I talk about the difficult economy, and when it all works, it's so rewarding. It feels so good. And so his name's Alex Richardson. We had a great conversation. He's a musician. He was a musician from Australia. And so then I said, well, I want to make introductions. I want to connect you to people. And so I introduced him to Josh Brenner, the CEO of Hired, who's also in CEO Pavilion. And I introduced him to Jason Schechner, the CRO of Hired Score. And so it just feels like we created, and then of course he was at this poker night, at my table laughing and having a ball. And it just felt like out of the box, we created this amazing experience, and he felt super welcomed into the community. So that was really cool. And then, I got an email. We sent out like a big email to everybody saying, hey, will you be at the CRO Summit? Which, as listeners are listening to this, it will be this coming Thursday in London. And this guy wrote back, Michael Philip Kowalik, and he wrote, morning, Sam, just thought I'd shoot you one note, re Pavilion and relevance to my job. The initial idea was to take part in CRO school while working at Twilio. Unfortunately, I got laid off, and the whole thing lost the immediate purpose. I do attend CRO school, but there's a twist. Once back on the job market, I've joined OTB calls with Russ and Pablo. That's Russ Huffman and Pablo Gridnitsky. And boy, they made a difference. I think I attended like 10 calls with them. We discussed outbound approach. We practiced my own elevator pitch. And I found the partnerships channel on Slack when I started getting traction. I signed the contract with my new employer 2 days ago. I need to attribute at least 50% of that to Pavilion.
Wow. That's cool.
That's cool. That's cool. So Pablo, Russ, Fred Mather, Asad, I know you spoke to the OTB community. It's good work. We're doing good things. We're helping people. So that felt really, really cool.
I'm speaking to the OTB community next month.
Exactly. So last thing I'll say is I read this book that Leslie Greenwood gave me, written by Mark Schaefer, called Belonging to the Brand, Why Community is the Last Great Marketing Strategy. And thank you, Leslie, for recommending the book, because it really has had a profound impact. And I just, I feel we're going to build this community over 20 years, and whatever happens this year is going to be totally fine. And it's just an honor. It's an honor to get to do this with you guys, and it's an honor to get to come to work every day and try to help people.
You heard it here first in 13 years when we're celebrating our 15,000th episode of Top Line.
All right. It was another great episode in the books. When do we have something scheduled with the next guest?
Next week.
Next week?
Wow.
Mark Roberge next week, everybody.
I get to kick things off, right?
You do. And you get to introduce him.
Sam and Asad.
You could do that anytime, by the way. You can do that anytime.
This is good. I got my warm up coming. I'm learning from the best there, Sam.
Right. Everybody give us 5 stars. Asad Zaman, CEO, Sales Talent Agency. If you need recruiting help, Quota Path for sales commission planning. AJ Bruno, the CEO. And I'm Sam Jacobs, the CEO of Pavilion. Go to joinpavilion.com. We can help you change your life, just like we did for Dr. Michael Philip Kowalik. All right, folks. We'll talk to you next week. Thanks so much for listening.
Bye, everyone.
Bye.
This episode of Top Line was brought to you by Contract Book. Contract Book's holistic contract management platform allows businesses to scale with accessible, actionable, future-proof contracts. Step into the new era at contractbook.com and take control of your contracts for good.
Thank you for listening to this episode of Top Line. To learn more about the trends, news, and developments impacting the world of B2B SaaS, head to joinpavilion.com, where more than 10,000 of the world's top go-to market leaders go to achieve and unlock their full professional potential.